Mic check one, mic check two, mic check one, mic check two. Guys, I'm having all different types of technical difficulties tonight. So that's part of the reason that I'm late. I had to restart my computer, all types of mess. So since I'm still in the process of setting up, if you're watching this on playback, use the chapters and jump right to the beginning of the show, where it says, welcome to weekly recap. When it goes there, bam, you're right at the beginning. I gotta work on putting a smile on and go ahead and get everything set up that need to be set up that I wasn't able to do before I started the live stream. Was already late. So my main goal was just getting the live stream going. Everything is going wrong. Everything. So the hardest part is just showing up. So that's where we are. So my apologies to anybody that was on time and the stream wasn't ready or up. This working from home is for the birds, bro. It's for the birds. It is for the birds. The first thing I'm doing when I get monetized and this money start flowing through from what I'm doing, I got to get an office. I got to go somewhere where I can work without any type of interruptions. This is nuts. I can't keep doing this. This is tough, guys. Working from home is tough. Tough. But y'all ain't come here to hear my problem. So let's talk about what's going on in the market. We are going to do a deep dive about, look at this. I got last week's information up on the screen. Oh, let me update this. We are going to do a deep dive into SpaceX. I'm going to do a deep dive about SpaceX because I think that a lot of people, my personal opinion, a lot of people are going to lose a lot of money messing with this IPO. And they did an excellent job of creating a narrative that get people to think, to make poor decisions, in my opinion. Instead of learning how this stuff works and actually doing the research, they will sit up there and ask everybody and their mama their opinion, listening to these people with suits on and dressed up all nice, telling you some foolishness, instead of you actually educating yourself and learning how to look at this stuff for yourself. If you educate yourself and learn how to look at this stuff for yourself, you don't even have to watch the news. The news don't have nothing to do with nothing. The news is the ultimate tool to get you to do something stupid. The news come out with a headline saying that they launched a rocket in Iran and the threat to the war is going to happen. It's a new threat of the war. So the S&P 500 index goes down for 2 or 3 days straight because of that headline. Then Trump says they've almost reached a peace deal, or Iran in it. Now the stock go back up. And you're selling based off of what's going on with the news. Like you're making your decisions based off of what's going on with the news instead of making decisions based off of what's going on with your research. They are masters at creating narratives. And as people, psychologically, we are victims of storylines. We eat a story up. We all about stories. Stories. And that's how they're able to pry our dollar from our hands, by creating narratives. And it's sad. It actually makes me upset. It hurts my heart to know that people getting taken advantage of because they buying into these narratives that have nothing to do particularly with the investment most of the time. It's more about getting you to make a decision. Good news means buy, bad news means sell. That's all they want you to think. Good news means buy, bad news means sell. As long as they can get you to think that, then they can get you to buy and sell whenever they want you to, whenever they want to. And they're going to get you to buy and sell when it benefit them. They're not going to get you to buy and sell when it benefit you. And then if the news lies all the time, which is not what I'm saying, if the news lies all of the time, then everybody would make money, because all you have to do is the opposite of what the news is saying. And they know that, so they don't lie all the time. They tell the truth when it's too late. If they told the truth ahead of time, then you could put yourself in position to profit from that truth. So they lie to you. So you can't put yourself in a position, or you get to second guessing yourself. Then by the time they start being honest, the stock or investment then already moved so far away from where you could have got a great entry, because you was waiting on them to tell you when you should buy or when you should sell. You've been waiting on the news to tell you, instead of educating yourself on learning how to make these decisions yourself. Thank you for tuning in. Whoever that is, hit the like button and consider subscribing to the channel. I'm still in the process of setting up, and I'm ranting about people following narratives instead of educating themselves and making decisions based off of what they actually did in their own analysis, instead of relying on the news to give you accurate information to make a decision. Good luck. Good luck. I did release a short today around noon that did pretty good, where I was talking about SpaceX. If you could do me a favor, whoever that is tuning in, put a YT in the chat if you're tuning in from YouTube, and put an FB in the chat if you're tuning in from Facebook. I would greatly appreciate it. And you know, on weekly recaps, it's way more laid back. So this is about Q&As and doing reviews, going over what happened in the market this week, doing updates about, come on, mouse, doing updates about what we said we were going to keep our eyes on, what we're going to watch. So last week we talked about watching HPE, Hewlett Packard, and TTD, the trade desk. I'll be back in one. No. Yeah, I'll be back in 1 second. Give me one. Yeah. I needed to get something to clean my glasses. They are filthy. If you wear glasses, then you know what I'm talking about. Woo! I can hear good. But as far as seeing, that's a whole nother battle I gotta fight. Brother can't see. Brother can't see. Oh, and I actually been looking forward to this live stream all week. I'm like, man, I can't wait to do the weekly. I can't wait to Sunday. And here it is. I couldn't start on time. Didn't get all the research I wanted to get done, because it's just been crazy in this house today, man. It's been crazy. Whatever. I'll clean that up later. Let me cut this laptop off, and let's start digging into some more of this stuff. You got any questions, you can go ahead and start dropping them in them comments so we can get to those tonight. I closed the laptop before it even shut down. Not even paying attention. Oh, it's still shutting down. I'm good. All right. Let me go to my script, my little opening and my closing. And we can go ahead and get started after I get that going. I can't wait to talk about SpaceX. This is nuts, guys. I can't believe they doing what they doing. And the times that we living in now, information is so abundant. All you got to do is just take the time to look it up. And now they done got to the point where they really think we that stupid. This is blowing my mind that these people that think they're above us really believe that we that stupid. Because what they doing ain't really that smart. They just think we that stupid to fall for it. And most of the time we do. But just the fact that they know that even with the information being public, that most people won't be educated enough or have the due diligence to put in effort to just go look for the information themselves. They know that they won't take the time to actually do it. So I'm going to show you guys tonight how you look this information up for yourselves. So instead of telling you what I think, I'm going to show you exactly why I believe what I believe. I'm going to actually show you. Thank you guys for tuning in. Hit that like button. Consider subscribing to the channel. Put a YT in the chat if you're tuning in from YouTube. Put an FB in the chat if you're tuning in from Facebook. If you have any questions, go ahead and drop them in the chat, because that's what we're doing tonight. We're doing Q&As and we're covering sector rotation. We're tracking the sectors to see where the money is flowing in and out of the market this week, how it flowed. We're talking about SpaceX tonight. We're talking about the trade desk. And we're talking about Hewlett Packard, because those two companies are what we said we were going to watch this week. I did some research to find out about some things with SpaceX, and we know that that was the big news this week. They IPO'd, and it was crazy, guys. Everybody and their mama was talking about SpaceX. So we're going to dive into it and actually do our due diligence to find out, is this even a good investment or not? Or is this all hype? Is this all hype that they got going on over here? We don't have to think about it. We can actually look it up. We can go check and see. All right, we done with that. Give me 1 second. We the company is profitable or not, how much money they make, whether or not they should be valued at 1.7 trillion something dollars like they IPO'd the company at. Did that even make sense? What type of rules and regulations did they change? And who did that benefit, changing those rules? Why were the rules in place in the first place? Why did they feel it was necessary to remove them? Who does that help? Who does it hurt? All those are things we need to ask questions. When you put your money into something, you better be asking some questions. You better be asking some questions, and not just some. You better be asking a lot of good questions, and stop letting these people just direct you to the slaughter because you don't know how to think for yourself. Stop it. Look, like even now, there's a movement in the market on Sunday night. They're moving this while you're not paying no attention to it. So Sunday night, the SPY, let me show you this. And then we're going to go ahead and get the show started. Matter of fact, it'll be here. Let me just go ahead and get this script going, and then I'll show you what I'm talking about. The SPY didn't went up $8 on Sunday, and the market closed. So somebody buying it. So if somebody shorted it, and the price also would have to hold. So it's a few nuances about that we'd have to pay attention to. All right, so I'm just gonna put this in my nose, and I'm gonna load these up, and we can go ahead and go. All right, TTD, HP. All right, this is good. This will get us started. the open, the close, then we're gonna freestyle everything else. Paste, got it in the prompter, back it up, got it, take care, God bless, go there. All right, that'll be my notes that I'll take care of later. All right, guys, we're about to go ahead and get started. My lips dry, let me get them together so they don't crack and bleed mid mid live stream. We don't want that. Give me some water. And I'm gonna go ahead and cut this phone off for a chime or something during the live stream. All right. We got that. Check. Mic check, got that. Take this off. Thank you for tuning in. Hit that like button and consider subscribing to the channel. We are about to get to it. We about to get started. Is that working? No, it's not. So go here. Bam. All right. Welcome to Weekly Recap Live. I am your host, Joseph Martin, and thank God, it is Sunday, guys. It is Sunday, and we are going to look at the sector rotation tracker so we can see how the money was flowing in and out and throughout the market between these sectors. See if we can get some clues on where the money is going. We're going to talk about SpaceX. We're going to talk about the trade desk, and we're going to talk about Hewlett Packard. Hewlett Packard and Trade Desk is what I said I was going to keep my eyes on last week when we did the Weekly Recap Live. I have been keeping an eye on Trade Desk, but I haven't been keeping an eye on Hewlett Packard. So we're going to go through that together tonight. If you have any questions, make sure you drop them in the chat, and then we will get to those throughout the night or throughout the live stream. And I have this Social Stream Ninja. Let me make sure I got this set up because this don't look right. Okay, that look good. So I'm going to have this set up to where when you guys leave a chat, it should chime to let me know that you left a message so I can see it and I can come back to it. So I don't want to have you waiting any longer. So let's go ahead and go over here to the charts. And I'm going to show you what I was talking about with the SPY. So here we go. Already off to a funny start because this ain't working. So give me a second. I'm going to fix it, guys. I forgot that was acting up before I started the live stream too. Share. There we go. Now we go here. Bam. All right. Now that we got that right, let's put the right ticker up here. There's the SPY. And we're going to watch some videos tonight too, but we'll get to that in a second. All right. So here we go. Here's the SPY. Let me zoom in and go to the extended hours. So right here, this gray area, we wouldn't be able to see this if we were looking at the daily chart. So here is Friday's candle right here. So being as so, there is no Saturday candle. There is no Sunday candle. So we can't see what's going on right now. Okay. The only way for us to see what's going on right now is in two places. One place is right here. It froze up. Give me a second. Oh, there we go. All right. So one of the places is right here where you see the bid and the ask. This isn't working right. Give me a second. The bid and the ask. So we can see that currently the SPY is trading at $749. It's moving, but we can't see any price action over here, right? So this is where we go. We go right over here to the extended hours on a minute chart. So this is a 5-day, 1-minute chart. So we can see the information down at the bottom. You can barely see it because of the disclaimer. So let me show you how we can bring it up. Go over here to the settings, and I'm gonna cut on my floating data box, and then we can get all that information in there. You see those dates, 6/14. So now we know that that's Sunday, right? That won't show up on the daily chart. I already let you know that. So the price has gapped up. Something big happened. Something happened where they had this gap up while you're not paying attention, while the market's supposed to be closed. So on Friday, they closed at $741.75. And right now on Sunday, after 9 o'clock, they've hit a high of $749.54. Okay. So something sneaky going on right here. It could be the positive news with the peace deal in Iran that made the market iffy, that made it, ooh, they were scared, which is what I was talking about at the beginning of the show. These narratives is all that someone needs for them to have an idea about, oh, okay, yeah, that's why they did it. The stories don't matter, guys. Please do your research. That's just the storyline to get you to believe that's why the market did something. Do your research. Do the work. So we can see that this has already jumped up almost $10 while nobody was watching. So that's the SPY. But we're going to go ahead and go over to our sector rotation tracker tool. And we're going to talk about that. So let me take SPY off the screen and put the Q&A up here. Remember, guys, this Q&A day, you got any questions, go ahead and ask. All right. So what we're looking at here. Oh, I left my floating data box on, so this make it. I'm like, what's that box? Cut that off. We don't need that right now. So what we're doing, explain to you what we're doing. We're looking at how each one of the 11 sectors performed last week. So I'm gonna walk you through this tool if this is your first time seeing it. So SPX is the S&P 500 index ticker. The tradable version of that, or one of them that we use, is the SPY. That's what we were just looking at. We were looking at the SPY, but we use the SPX to get an idea of how the S&P 500 index performed last week. And we're using 5 daily candles to do this. That's why this says 5D up here, okay? So the S&P 500 index went up 0.7% last week over those 5 days. Energy went down 0.2%. Materials went up 3.1%. Industrials went up 1.2%. Consumer discretionary went up 1.5%. Consumer staples went up 2.9%. Healthcare went up 0.5%. Financials went up 2%. Information technology went up 2.5%. Communication services, it looks flat. It has a negative next to the zero, but it looks flat. Utilities went up 0.4%. Real estate went up 1.5%. So real quick, which one performed the best? I'm seeing materials. So it looks like materials performed the best last week. And what's interesting about that is the live stream that we did on Friday. Materials, if I'm not mistaken, was all green on the heat map. Let me double check that right quick. So if we go to analyze, no, market watch, then we go to visualize, and we want to go to materials. So if I hold down shift, so we're in the S&P 500 index on the heat map, okay? This is still set to the performance on Friday, even though we still see some trading going on like what we seen with the SPY. If we hold down shift, let me put this right disclaimer up. If we hold down shift and mouse over these areas, it's not doing it right now. Give me a second. Come on now, stop acting silly. There we go. It'll highlight the section. So that's communication services. We want to go down here to materials. Guys, it was green. Let me take me off the screen so you can see it. The whole material sector, let me take the Q&A off. That's even blocking something. The whole material sector was green on Friday. And then when we used the sector rotation tracker tool over here on the charts, it confirmed that it performed well last week, because this is the average of all 5 trading days for the industrials sector. Okay. Now, let me put me back on the screen and let's talk about this. So we know how, I see it put me back on the screen. Here we go. So we know how you can invest directly in the S&P 500 by using the SPY. I think another one is the VOO. So that's offered by Vanguard. So here's the thing. There are other ways for you to invest directly, or someone to invest directly in a sector. So if they didn't want to invest in the whole S&P 500 index and they wanted to invest in a specific sector, there are tickers for that. And that was something that I did say I wanted to talk about and discuss. I know the ticker for financials and information technology. So let's play around with these and find it. So let's go to the charts. We need to change this tool. And we all over the place, but I'm gonna take my time tonight, guys. We just gonna take my time. So we go to closed. When we go back to the charts, XLK is information technology. Okay, so that's the ETF for information technology. And it's offered by State Street. XLF is financials. But we want the one for materials. It might be XLM. No, it's not XLM. It's gonna be a funny letter. Let me go ahead and look this up. So let me take me off the screen, or put me on the screen so you don't have to see this. Come on, ticker. Come on, come on. Oh my gosh, guys, this is acting up tonight. This is not gonna be a smooth night. Here we go. Let's figure this out. There we go. So my stream deck is not working tonight, guys. That's what's going on. Something weird is going on with my system. So that's something I'm gonna have to work on over the weekend. Well, before we do the live stream tomorrow, there's the Q&A. All right. So let me go to let's go to Gemini. Trading and investing, drop that off. Give me all the sector ETFs from State Street. Example, XLF financials. I need all 11. All right, here we go. Bring you over so you can see this. Here we go. So blow this up. Bam. Take me off the screen so I'm not blocking it. Put the Q&A thing there. Oh, take me off the screen. There we go. All right. So we're looking for the one that has to do with materials. So it's XLB. All right. So let's put the charts back up. And now we're going to put in XLB. And then we can see how materials performed. There it is. So we can see how they performed last week. So this is going to be Monday, Tuesday, Wednesday, Thursday, Friday. So they opened here last week and they closed here. So it looks like a small move. We just going from here to here, but it came all the way down here on Tuesday and then finished all the way up here on Friday. That's what we see in there. This sucks, guys. This thing with my stream deck not acting right. I'm gonna have to like really pay attention to what's going on here to move this stuff around. But let's go back to the rotation tracker and finish this out. So I just wanted to show you how you can actually invest, how someone can invest in a specific sector, diversified in an ETF. And we'll go back and look at that in a second. Let's go all the way through this because I'm all over the place. All right, we talked about this. We talked about the one that performed the best. So materials performed the best, and the one that performed the worst, going from left to right, it looks like energy. Energy performed the worst last week with negative 0.2%. So let's go ahead and look at how these sectors performed over the month. So we can see that right here. 1M is 1 month. So the S&P 500 is down 0.2% over the most recent month. And I don't mean just it's starting from the week that just passed. So that's when it's counting from Friday all the way back to another Friday that accumulates a month. That's how it's doing it. All right. So energy is down 1.1%. Materials is up 0.2%. Industrials are up 1.5%. Consumer discretionary is down 1.8%. Consumer staples is up 1.3%. Healthcare is up 4.8%. Financials is up 4.6%. Information technology is up 4.5%. Communication services are down 4.4%. Utilities are down 0.3%. And real estate is up 2.6%. So that's the sector performance over the past month. Who performed the best? Let's look at that. Healthcare with 4.8% over the past month. Who performed the worst? Looks like communication services with negative 4.4%. All right, now let's go ahead and focus on the last 3 months performance in the 11 sectors and the S&P 500 index. Hit that like button and consider subscribing to the channel. I definitely would appreciate it. And if you have any questions, go ahead and drop them in the chat. So the SPY in the last, not the SPY, the S&P 500 performance in the last 3 months, they're up 12.1%. All right, now also think about this. If it was down in the last, we just looked at the last month, that means that most of the gain that we're seeing from this 12.1% was 2 months ago. Because when we looked at 1 month performance, it was down 2%. So that's going to be equated down. It was down 0.2%. So that's going to be averaged in to the performance to the extra 2 months that we put onto it to get the full 3 months. I hope that makes sense to you. So the information sector is down 0.3%. Materials up 6.1%, industrials up 7%, consumer discretionary up 5.2%, consumer staples up 1.3%, healthcare up 2.7%, financials up 9.1%, information technology up 35.1%, communication services down 2.5%, utilities down 5.2%, real estate up 7.4%. Okay, so who performed the best? Information technology, no doubt, 35.1%, up 35.1%. Who performed the worst? Looks like it's utilities, guys, and they're down 5.2% in the past 3 months. All right, the last time frame we're going to look at is going to be 6 months. There we go, 6M. So the S&P 500 is up 7.9% in the last 6 months. Energy is up 24.6% in the last 6 months. Let's go back. That caught my attention. So in 3 months, it's down 0.3%, but in 6 months, it's up 24.6%. So most of that gain was beyond 3 months ago. In month 4, 5, and 6, because those are the extra months that we added onto it to get back to 6 months. I hope that makes sense to you. So in the material sector, in the last 6 months, it's up 18%. Industrials is up 12.9%. Consumer discretionary is down 2.6%. Consumer staples are up 9.7%. Healthcare is up 1.1%. Financials down 1%. Information technology up 24.3%. Guys, that sounds, no, it's not flat, but they got some losses in there because when we go back to 3 months on information technology, it's up 35.1%. Now, when we add those additional 3 months, it's a lower number on average. You see that? So those extra, so month 4, 5, and 6 brought the average down to 24.3% in the past 6 months. In the last 6 months, communication services is down 4.6%. Utilities is up 4.6%. Real estate is up 11.8% over the last 6 months. So who performed the best? I think it's information technology again. Nope, it's actually energy. And remember, we talked about this before. Energy is a big deal because of the AI boom. The data centers, they require a lot of energy. It's not just gas prices. It's not just oil. It's not just what's going on with the Hormuz Strait or whatever, that stuff that's going over there about high gas prices. That's not the only thing that's driving the energy sector. It's the fact that they got to power that information technology sector. Data centers take a lot of energy. So in the last 6 months, the energy sector is up 24.6%. It's actually higher than the technology sector in that same time frame. So they are the one that did the best. As far as who did the worst, as far as sectors, communication services down 4.6%. They did the worst. Yep, that's what I'm seeing. All right, so we went over our sectors to track the sector performance using the sector rotation tracker tool. So now we're going to go back to, what did I want to talk about? It was something about, I want to talk about the different ETFs where someone can invest directly into a sector. Instead of investing in the whole S&P 500 index, they can invest in a sector. Give me a second. Let me just put me on the screen for a second. Cam and support. I think that's the one. Yep. Okay. Take that off. Then put the Q&A up here. Guys, if you have any questions, don't be shy. Go ahead and ask them questions. All right. Trade. No. We want to go to this list. Here's the list so you guys can see it. Now, there are other companies that offer ETFs. This is the State Street offering. Okay. This is the State Street offering. I'm going to take me off the screen. Here we go. So XLK is the information technology sector. This is an ETF for information technology. So if someone just wanted to invest in information technology, this is a ticker for that. There are other tickers, but this is the one offered by State Street. You see it right up here. Here is a complete list of all 11 select sector SPDR ETFs from State Street, tracking every sector within the S&P 500. So let me show you what this looks like on the Thinkorswim platform. When we go over to analyze, if we typed in XLF, that's going to be the financials one offered by State Street. When we go there, down at the bottom, it's telling us the different companies that are listed inside that index, that ETF. Okay, and it tells you their weight. So JP Morgan is 11.27% of that ETF. Then you got Visa. Then you got MasterCard, Bank of America. Let me make sure those are the right companies because I'm just naming them. They have the tickers here, but they don't have a company name. Let me see if you can. No, I don't even think you can add it. Then they have a pie chart. Here go the names. So if we go to pie chart, now we can see the names. Visa, MasterCard, you mouse over it, you see it now? Bank of America, Goldman Sachs. So now you know how to get those names. If you go to table, when we mouse over it, it gives the company names here too. So that's how you get the company names. Just mouse over it. Goldman Sachs, Morgan Stanley, Wells Fargo, Citigroup. So you can see what companies are inside that ETF and what their weights are. So 11%, 11.27% of an invested amount that you put into, or someone puts into that ETF, that's how much of it would go just towards JP Morgan Chase. And then it'd be divided up amongst all these other companies that's listed, show all holdings, until it takes up 100% of whatever was invested. And then you can see that broken down also with the pie chart right here. Why is this like this? Because it's only saying 87.84%. Let me type in SPY and let's see what's going on over here. SPY. This is why I'm asking that question. You see over in the SPY, the whole pie is filled. But then when we went over to XLF, not SLF, XLF. Come on now. XLF. Now it's different. That's weird, guys. Remember, Berkshire wasn't the first one. Now it's showing Berkshire. That's weird. Okay, here it is. So you can change it here. Total Fund Industries. So you can break it up. I'm going to have to do some more research and look into that. But those are the different listings. So you can go right there and find them. XLK, Information Technology, XLF, Financials. Let me put the chat back up just in case somebody asks the question. Healthcare is XLV. XLY is Consumers Discretionary. XLC is communication services. XLI is industrials. XLP are consumer staples. XLE is energy. XLU utilities. XLRE is real estate, and XLB are materials. So if someone wanted to invest directly into a specific sector, like how we were seeing on the heat map, pull this back up. On the heat map, here's materials. So materials was doing well. So instead of someone investing in the entire S&P 500 index, they could invest directly in materials, which was XLB, if I'm not mistaken. So let's go back and verify that. XLB, right, materials down here at the bottom. Take me off the screen so you can see it for yourself. XLB, got it right there. Okay, so we seen that, we broke that down. Now what are we going to cover? Let's go here. Put Thinkorswim back up, put me back on the screen. I sure hate my stream deck ain't acting right tonight. We gonna do a really nice deep dive into SpaceX, but I think I want to end the show with that one, guys, because I found out a lot of stuff with the SpaceX, and I don't want to leave nothing out. I don't care. Let me go ahead and get my ticker stuff up here, and we can get started with the SpaceX situation, and then we'll cover the other two. We'll go over the other two stuff. Let me just go ahead and get this ticker stuff put up. So SpaceX ticker is SPCX. Got it. And it's a long company name too. So let me pull this up over here so you can see it. Analyze SPCX. 168. Is it still going up? Yeah, guys, it's still going up. You see it right over here, the bid and ask. So they opened last week at 150, and with the market being closed on Sunday, they up to $167 right now. Here's their website. I wanted to get the company name. That's why I went over there, so I could get the company name. So let me put this name in here, pull this up on the screen, and we can talk about it. CORP. I hope I spelled this right. We about to see, because I typed that pretty fast. All right. There's their long information on the chart. But we got it. So there we go. All right. Now, guys, this SpaceX situation. Okay. I have no idea how they were able to get away with what they were able to get away with. Okay. So I'm giving you a disclaimer. This is a theory. Some of the stuff I'm going to be able to prove. Some of the stuff I'm not. Just a theory. I believe that the underwriters in the banks were using SpaceX as an opportunity to get people to invest in something they knew was extremely overvalued. Okay. So as I've been doing my research, which I encourage you to do yours, I've been finding out a lot of different rules that were changed before SpaceX went public. Okay. So one of those rules is that these companies are supposed to prove themselves before they can get listed on certain exchanges. They allow SpaceX to go straight to the NASDAQ. They IPO right on the NASDAQ. So let's just get down to the nitty gritty. SpaceX lost money. They're not profitable. How is a company that's not making money, as far as like not profitable, worth $1.7 trillion? How is that possible? And let's break this down even further. Let's go ahead and look at the weights. So there's a website, and let me pull this over. I just want you to see what I'm doing. There's a website called Slick Charts. Here it is. So on this website, they let you know what the weights are in the S&P 500 index, which is something we looked at the beginning of the live stream, right? So when we go down here, these are the top companies in the S&P 500 index. NVIDIA is number one. Apple, let me take me off the screen. Apple is number two. We're just going to read them. Microsoft, Amazon, Google's on here twice. Broadcom, Tesla, Meta, Micron, Berkshire Hathaway, and Eli Lilly. Here's what I want you to pay attention to, guys. These companies are valued at $1 trillion each or more, $1 trillion or more. Here's the valuations. Here's the market cap. 1.01 trillion, 1.06 trillion. The higher you go, you get all the way up here to NVIDIA to almost 5 trillion. They IPO'd SpaceX to be in between Tesla and Broadcom at 1.75 trillion. All of these companies make money, and their revenue is extremely high compared to what SpaceX is. Okay, so let's go over to, put me back on the screen. I want us to go over to the SEC website. All right. Now, the reason we're going to the SEC website is because most people don't. They have no idea that this is public information. It's easy to look up and you can see this for yourself. So this is the Edgar tool that's offered for free on the SEC website. It's free, guys. It's free. It's public information. So what kills me about this whole thing, or blows my mind, maybe I shouldn't use that word. What blows my mind about this is that they're able to trick us or lie to us in plain sight because they know we're not going to go look this stuff up. This stuff is public information. We can just go look it up. SPCX. So they had to file with the SEC and disclose information to the public before they were listed on the open market. Okay. So one of the things I want to look at as a trader and investor is this company making money? Are they profitable? There's a difference between revenue and profit. Some people don't understand this. Revenue just comes from sales. Profit is what's left after you cover your expenses. Just look at it like that. So top line is revenue. Bottom line is profit. Is the company profitable? So the form we're looking for is this one right here, S1. Let me take me off the screen so you can see it. We're looking for this form, S1 registration statement. This is what we're looking for. So we open up this document. Let me zoom in because this looks a little funny. Let's zoom in. All right. So here's what they had to file with the SEC. This is what I want you to pay attention to. And then we're going to go to the financials as well. They have a lot of photos in this doggone in this document. They're not talking about money. They just talking about what the company does with these pictures. I don't see anything about how much money they make yet. They're just giving you stats and pictures of stuff. Our mission to build systems and technologies necessary to make life multi-planetary. It's fantastic. It's a storyline, guys. Look at these pictures. Where are the financials? Whose financials got all these photos? Okay. Photo. We just now get, I don't even know how many photos that was, but listen, here we go. Index to financial statements. It's the last thing on the list. Look at how many pages you got. Glossary of terms. Look at this. It's over 250 pages. They put the financials, it looks like, at the very end. That's one of the most important things you need to see. Why is that last? So we go to the financial statement. Just clicked on it. So now that we down near the financials, you see the scroll on the left. This is almost at the bottom. So we're looking for, let me pay attention. Report the consolidated balance sheets, operations. Right here, consolidated statements of comprehensive income. We want to know about the income, the money. What type of money are you making? Guys, these brackets are negative. Just in case you don't know how to read this, I'm about to explain this to you right now and put me on the screen so you can see how confused I am about what they're talking about. Net income. If it's in brackets, it's a loss. They lost 4.9 billion in 2025. The loss is in millions. You see where it say millions? So that's 937 million, but that's 4 billion. So in 2025, this company lost almost $5 billion. How are you valuing this company at 1.7 trillion? And last year they lost almost 5 billion. What else did I look at? So that's net income. It was a negative EPS. It was a negative EPS somewhere. I'm browsing over it. I'm looking for it. I'm looking for it. EPS, any questions? Nope. Still ain't nobody putting nothing in the chat. But y'all looking. So let's look over this together. EPS. Here it is. Here's the EPS. Net income loss per share. So nobody was shareholders yet publicly. They lost $1.69 per share. Here's revenue. They made $18 billion in sales. That's not profit. That's just the money they made. Then they have costs, right? So after all of that, we're looking for the bottom line. The bottom line is right here. Net income loss. So the net income loss is that 4.9. 4.9 billion. You're not making, how are they valuing this company at almost $2 trillion, guys? It makes absolutely no sense. We can look at the financials. And what blew my mind is when we were looking at the stories behind this whole SpaceX thing, they ain't mentioning nothing about how much money the company make. They wasn't mentioning anything about how much the company make. Not one doggone thing. Nothing. They're going to space. They shoot rockets. They going to space. They shoot rockets. They got satellites. They do this. They do that. Nobody's talking about how much money they made or lost. Now, if that wasn't enough for you, I got a nice treat for you. We're going to watch what Wall Street Trapper said. And he said this about 2 weeks ago, actually. So I just ended up catching it today because I wanted to see some of the things that he was talking about. So we're going to watch this together because he had broke it down. I'm trying to fix this on my monitor. Give me a second. This is not what I want you to see. So we go right there while I try to fix this, or I work on fixing this. Replace. Here we go. Also share audio. That's what I wanted to do. Okay, also share system audio. There we go. All right. And then we'll talk about some of the rules and stuff that they changed, because they changed. Oh, man. Yeah, it's crazy. So let me find the video history. Here we go. SpaceX trap nobody is talking about. Go. And I'm gonna have to hear it. Mic, and then turn this up so it don't come back in the mic. Bear with me, guys. I'm working on it. You're gonna get it. Pause this video. Open this up. Come on now. This is a mess. All right, LG. We got that. All right, turn that up so I can hear it. And go over here and have that turned up. Okay, got it. So he had a call come in where somebody had asked him a question about should they buy the IPO or should they wait? So that's what he's answering over here. So I'm gonna mute the mic and then I'm gonna play it. If you can't hear the sound, let me know in the chat, but you should. All right. Now, what he mean by once they can get liquid, they gonna get liquid. It's people that had already owned SpaceX shares before they went public. Elon was giving his employees those shares before they went public. Also, they only put 5% of the company on the open market. They only put 5% ownership of the company available on the open market. So 95% of the ownership of that company is not available to the public. Keep that in mind. All right. So all of those people, once they can sell their shares, can flood the market with those shares that they didn't have to pay for. They were given those shares already by Elon as compensation. So once we trade it on the open market at a certain price, they're able to come in and participate and get it for those prices as well. This is what I mean by asking questions. Remember, we just talked about revenue. We just talked about sales. So he talked about Amazon. So let's get busy. Let's do our research. Go right back to Edgar. Go right back to Edgar. Can you hear me? Yeah, you can hear me. We go right back to Edgar. We put in AMZ in Amazon. Bam. Now we go over here. Last 30 days. Search. Scroll down here to the bottom. We're looking for the 8K. Good evening. I'm unable to hear the video. Thank you for letting me know. You couldn't hear the video when it was playing. All right, cool. Let's try this again. Thank you for the comment. Thank you so much for the comment. Can you hear me at least? Let me make sure you can hear me. Let's go back to the video. Let's try to get this audio going because since you said you couldn't hear it. Let's try this again. Go here. So go here, here, here. Replace. Also shared audio. Yeah, I see it. I'm gonna try this again. It's sharing your screen and audio. I can hear you. Thank you so much for letting me know that. Thank you. All right. I think I fixed it. So let's try this again. Thank you for letting me know. That helped me out tremendously. So if we go back to the video. Come on now. Where we at? All right. Me.
Honest with you, bro. Like I'm not trying to run and jump on the SpaceX IPO because I know how it's gonna go. It's gonna run up, and then once them people can get liquid, they're gonna get liquid. It's gonna come back down, and then once it come back down, cause you gotta think. I saw something the other day that I posted. It said that Amazon is a $2.8 trillion company that brings in $275 billion. How in the hell is SpaceX gonna be a $1.75 trillion company with $18 billion in revenue? That don't make sense to me. I'm not the smartest crayon in the box.
You know what? You gotta help me. I gotta pay you. I'm just talking away. Thank you so much. Oh my gosh. I need a co-host. I need a somebody to do the production for me. This is a lot to do all this at once, but thank you so much. Thank you. Because I've been looking crazy. Already looking crazy doing it. But you can hear me now. All right, current report, QQQ, insider. This is what we're gonna do. We're gonna go to the charts. We're gonna find out the date we're looking for. So AMZN. We're looking at the 1 year daily chart. And we're looking for when Amazon had earnings. So Amazon had earnings on 4/29. So that's the date we're looking for when we go to Edgar. $4.29. So April 29th. We're gonna make this easy. There we go. So here's the earning report. 8K. Press release information. F11. Where are the financials? Here we go. Which one is this? Consolidated statement of cash flows. So we're not looking for cash flows. We're looking for the income statement. It's also called statement of operations. So this is what we're looking for. Net product sales. Total net sales. This is it right here. 155 billion. They telling you that it's in millions. 155 billion. That's the revenue. SpaceX was 18 billion. It was 18 billion. It's nowhere near this. And it was profitable. This one is actually profitable. So we go down here, we got net income. 17 billion in profit. SpaceX lost almost 5 billion. So what is the market cap of Amazon then? So we can go right here to the charts on Thinkorswim. Let me put the right disclaimer up. Then we go over here to the Analyze tab. We scroll down right here, market cap. 2.6 trillion. They telling you it's in millions. 2.6 trillion. That's the market cap. So it's a little bit more than what they value SpaceX as. But this company actually profitable and have way more revenue. So let's get down to the bottom of what's going on. So let me just explain what's actually going on here. What they're doing, they're trying to get everybody to pay now for a price that they believe that will be fair in the future. I hope that makes sense to you. I'm gonna say that again. They're trying to get everyone to pay now for what they believe SpaceX will be worth in the future. Think about that and tell me, does that sound fair? And I'm gonna break this down a little bit further. Let's use an analogy of like real estate. If you had a house or someone had a house that you wanted to purchase and this house was beat to crap, it's tore up right now, but they know you gonna fix it. And since you gonna fix it, that house gonna be worth, let's say, $300,000 after you fix it. So they know what you gonna do. So they tell you, oh, okay, well, since I know you gonna fix it, I want to sell you the house for $250,000. You're like, whoa, wait a minute. That house, it's not worth that now. The house is only worth $20, $30, maybe $40,000 now. Why are you trying to charge me what it's gonna be worth later? Because you gonna fix it. It's gonna be worth $300,000, but it's not that yet. I want to pay you for what it's worth right now. That's the concept, guys. It's a story. It's all hype. They're getting people to buy SpaceX based off what they believe it will be worth in the future, and they're charging you future prices now. And we can find this out by looking at the financials. That's why on this channel, I talk about education. We can look this stuff up. We can ask questions. We can build a community. We can find this stuff out for ourselves and we don't have to fall for the okie doke. So that's what Trap was pointing out. And I'm gonna play this a little bit more so we can let him cook a little, because he was cooking. So let's put that back up on there. Let me mute me. Hopefully I can remember.
All right, the top of my crayon kind of broke. The paper wrapped around my crayon scratched up. All right, I even got some other colors marked on my crayon. Right, I'm bruised and battered, but I'm a crayon. Right, so if you got a company that's worth $2.8 trillion, but it brings in $275 billion in revenue, that's called justifiable. Right, so the multiple is the PE ratio. That's why we just.
I didn't mean to click that. So what he was saying was, it makes sense for me to pay that much for Amazon. I understand how much money they bringing in. I understand that they profitable. So it makes sense for me to pay that. So that's what he's breaking down.
It's an open loop that I just closed from earlier. We talked about earnings, we talked about multiple, and we talked about dividends. Right, so now you got a company that's about to go public at 1.75 trillion with a T to even 2 trillion with a T, but it's bringing in 18 billion in revenue. That's, watch this, that's 1,000 times the multiple.
So they trying to get you to pay 1,000 times more based on the revenue compared to what the company actually worth. Insane. And that's basically what he breaking down. Pen and paper, basic math. You don't need a story. I don't need to see no rocket. I don't need to see space. I don't need to see no moon. Show me the financials. Show me the numbers. Show me the paperwork. That's all I need to see. Keep your pictures.
Well, you cooking right there.
That means this company is way overvalued. Now, we just talked about Palantir having 147 PE ratio, meaning the valuation of the company is 147 times worth more than the money is bringing in. I'm not mad at that. Even though it's a good company, bringing in good money, we see what they doing. Bruh, this company is coming to the market worth $1.75 trillion.
And this isn't something that they have actually proved. This is a number that they put on it. Now, I'm gonna give you the game, so stick with me, y'all. Y'all learning. I'm gonna break this down a little bit more about what's happening, because believe it or not, Elon had already got paid. He done already got paid. And when I did the research and found this out, blew my mind. He done already been paid. SpaceX is already out of the picture. And I'm gonna break that down after we finish seeing what Trap had talked about. He talked about this 2 weeks ago.
In 2025, it brought in $18 billion in revenue. Bro, I'm not about to get smoked like that. You're not about to smoke me like that. Not like that. Not like that. If it run up, I'm gonna be like, yep, cool. Because guess what? If it's a good company, it's gonna be a good company 2 years from now too. And now what happened is you can get some earnings coming in, and now I can start seeing that paperwork, and now I can see what I need to do to it. Man, I'm straight.
And that's how I'm feeling. If it go up and I miss it, I'm cool with that. Why? Because I'm trading and investing based off of what the financials is telling me. Just looking at the charts is not enough. The charts is just telling you where the price is now. It's telling you how many people buying it, how many trades was done within a specific time frame, what price levels is people responding to. It don't even have that historical data yet because it's only been trading 1 day. So you can't even just base it off the technicals. The financials is what lets you know if the company is at fair value, overvalue, or undervalue. And then you bring the technicals into the game to figure out where the buyers start stepping in at, where people get interested in buying and drive the price up, or where people get interested in selling and drive the price down. So they work together. But as individuals, as traders, as retailers, we have to get do our education and do our due diligence and do the work and stop just thinking about getting rich overnight. Do the work. They put the information out here, but we won't take the time to actually educate ourselves. So that's how I'm feeling about it. Did the stock price go up? Absolutely. Did a short on it. So I'm gonna share that short with you that I did. Let me put me back on the screen real quick. Remember, if you guys have any questions, go ahead and drop them in the chat while I'm pulling this up, because I want you guys to see the short that I did. It ended up getting a good response for it. Let me put this on the screen. There we go. All right, now while that's doing that, I'm gonna pull this short up. YouTube. All right. Go to shorts. And then I'll talk to you more about what's going on with the underwriters and the banks, because that's how Elon then got paid already. And that was something new that I had learned. That was something new. All right, so channel. Here we go. So here is my shorts channel. And I want to play for you guys the short that I made about SpaceX. So let's go back here. And it actually did well. So this is my shorts channel. So let's see. Watch out. And what's blowing my mind about SpaceX is that the company is not even profitable right now. They're not even making money. That's an insult to all the other companies that's valued over $1 trillion that took time to actually become profitable, grow, expand. They allowed SpaceX to skip all of that. That's crazy. Everything I'm hearing about why somebody's interested in buying this company, it's a story. They're gonna put a data center in orbit. They want 1 million people living on Mars by a certain time. Like, everything is stories. I'm like, nah. Well, the stock went up. So does balloons. Balloons go up, they come back down. That don't mean anything. The stock went up in one day. Whoop-dee-doo, whoop-dee-doo. That's one of the things that I learned over the time of me paying attention to the market and investing in trading. Stay away from stories. When the numbers are good, you don't need a story. Watch out. All right. So that actually got a good response today when that dropped on the shorts channel. But yeah, guys, you don't need a story. All you need to do is learn how to read those numbers. And that'll tell you. Think about it like this. If you invest in a company and they don't make no money, how they gonna pay you back? That's simple. And that's the idea. You're not just trading an idea. You're not just trading hype or investing in hype. You're investing in a company. You need to understand the company. Now, is it a good company? Is it a bad company? What is good or bad? We trying to figure out, do they make money or not? And how much money are they making? How consistently are they making money? We don't know that yet. And what they plan on doing in the future, that's great, but they're not making that yet. So you're going to charge me what the company will be worth in the future if they're able to accomplish all these things they say they're going to say? I mean, they say they're going to do? Nah, we ain't going for it. I ain't going for it. Somebody else might go for it, but I ain't going for it. I'm looking at the paperwork. I got to see the paperwork. I got to understand it. So this is what I found out about the underwriters. With the underwriters, when a company IPOs to go public, they sell their shares to underwriters. So they get paid out the gate. Let me say that again. SpaceX then already been paid at that $135 per share valuation. They've already been paid. So since they've already been paid, they laughing all the way to the bank. Now the underwriters have to find people to sell those shares to. Those are the banks and the institutions. They call smart money. They call us dumb money. They think we make dumb decisions. And most of the time we do, because we follow the narratives of whatever they talking about instead of doing what I'm teaching, which is look the stuff up and do your own research. Okay. So there was a clause inside of the IPO deal, which I'm going to discuss with you now with the underwriters. Okay. And I'm going to read that to you. We're going to go through that right now. So let's pull that up on the screen. Here is a Instagram post where they're talking about it. You see how they got these green shoes on? Those green shoes is actually a term. We're going to read it right here. So why are all these suits and ties wearing Kevin Durant kicks? Well, green shoe is a Wall Street term for an initial public offering, the IPO that SpaceX just did, provision that allows banks to sell additional shares when investor demand is exceptionally strong. So let me explain that to you. Elon only gave them 5% of the company in shares to be able to sell on the open market. The green shoe clause allows them to sell 15% of shares. So they're able to sell 10% of shares that they don't even have. So that gives them the opportunity to open up what they call a short position, because they have to buy those shares back regardless of how much the shares cost. So if the stock goes up, that's a risk to them because they have to buy it back at a higher price. Come to find out, with this green shoe clause, they have 30 days to buy the stock back from Elon for that locked in price of $135. So it's no risk for them. But the people buying it, once they sell it to you, you at risk because you got to sell it to somebody who willing to pay a higher price than you did. And then if the stock price falls, then they able to buy those shares back at a cheaper price than what they sold them to you for, or sold it to people for when they first IPO'd. And they know exactly what they're doing. And Elon is an excellent marketer. Hence the green shoes and smiling and taking pictures. Guys, this is like printing money. They printing money off of something that ain't even happened yet. And all this is legal. Look at the other photo. They go into it a little bit more. Green shoe is a Wall Street term for an IPO provision that allows banks to sell additional shares even when investor demand is exceptionally strong. For SpaceX's stock market debut, employees wore custom SpaceX Nikes and stadium green Nike KD 18s as a tongue-in-cheek reference to the IPO's green shoe option. They get to make money regardless if we lose money or not. They protect it if the stock go up or if it go down. They laughing all the way to the bank, guys. Most IPOs historically crash after 6 months, and here's why. They usually crash after 6 months because the people that own the shares before the company went public, their shares become unlocked. So when their shares are unlocked, now they can sell those shares on the open market, and now you have more supply than you have demand, and then the stock price tanks. So let's go to the charts. Let's go to the charts. What's a company that's done this before? Lyft, L-Y-F-T. So what I'm doing, I'm pulling up Lyft. Let me pull this on the screen so you can see it. All right, so I got Lyft pulled up on the charts. Let me fix the caption to put the right company up here. Give me a second. LYFT and then Lyft Incorporated. Got it. Save. There we go. Here. So we're looking at Lyft. Put the right disclaimer up there. Got it. Now we're going to go to the 10-year weekly chart. You see up here? This is where Lyft IPO'd at. Now I know we only looking at one company, guys. I know we only looking at one company. Let's zoom in. That's 2019. This is around where Lyft IPO. They valued the company at $80 a share. I don't remember what they valued the IPO at as the total value. Like we know SpaceX is 1.7 trillion. But I don't remember what they valued at the total value, but the share price was between $80 and $90 when it first IPO Lyft. That stock came all the way down to $7.85. And this is usually what happens after companies IPO. So now that the public then got wind of this, they found different ways for them to still get us to buy whether we want to or not. So here's the other case with SpaceX. They had rules and regulations in place where they would have to do things before they got listed on the major indexes, on the major exchanges, and be in a certain value before they can be on the S&P 500, before they can be in the QQQ, those certain ETFs. But with them being able to meet these requirements early, when they get inside those ETFs, those fund managers have to buy the shares, whether the company profitable or not. Oh my gosh. Yeah. All right. So I'm done with I'm done with the SpaceX rant because I needed to be a little bit more organized, but I think I got everything I wanted to get off my chest on the fly about that. So let's talk about the trade desk. Let's go to the trade desk because that's something else I think that's interesting to talk about, because that was something I said we were going to keep our eyes on, or I was going to keep my eyes on last week. So trade desk, something slick is happening over here, guys. So let me take me off the screen. Let's put the right information up here. TTD, trade desk, the trade desk. There we go. Got it. Save. Put that on the screen. All right. So last week I said we was going to keep an eye on trade desk. So what had happened, we were getting some negative news last week. So this is Friday, Thursday, Wednesday, Tuesday, Monday. All right. So this is what it was looking like last week with that negative news about Iran and then the spy having trouble last week. This stock was not able to break that 52-week low. So the 52-week low used to be over here. Would you say most IPOs are overvalued or just some? What's up, Cuzzo? Thank you for the comment. My personal opinion, I would have to look at the financials, but from my understanding, most of them are overvalued. Most because of why they're IPOing. So that's the other thing that we don't ask ourselves, like, what's in it for them? Why are they IPOing? Why is the company going public? They're not going public to help us out. They're going public for a reason. So that was the question that I asked myself. So let me put your comment back up. So what I ended up noticing was that once I understood what an IPO actually, what they're doing, they're raising money. The company needs funding. So since they need funding, they ask private investors. So that's what Elon and stuff was doing. They got venture, what do they call them? Venture capitalists and stuff like that. And guess what they're going to want to look at? The financials. They're going to want to look at the financials and know what they're investing in. But Elon got such this big story around himself. People believe Elon almost anything he say. But the idea of a company going public is to raise capital. That's the goal of them going public, purely to raise capital. So if they're raising capital because they need it, they're going to take that money and then they're going to reinvest into it to themselves to start attempting to grow the company. So if this company is going through a reinvestment and a growth process, that means it's going to take time before they can give you a return on your investment, because they're using most of the capital that they have now to grow the company and to reinvest into themselves. Once they do that and they become profitable, then they can start returning money to the investor. So if they can do that, why won't you just wait until the company become profitable so you can start reaping the benefits of the return? Because they don't punish you for not buying as soon as an IPO. You get the benefits of being an investor as soon as you start investing. So it doesn't, because of that fact, that's why I believe it makes more sense to wait. But if somebody wants to invest earlier, that's on them. But for me, understanding why that company IPOing in the first place, Elon, you worth $1 gazillion already. How does this company going public make you a trillionaire? It goes you a trillionaire because he owns 85% of SpaceX. And because of that, he has a certain amount of shares that as soon as they're traded on the market for a certain price, that makes all the shares that he owns worth whatever is trading for on the market. And if I'm not mistaken, he still holds 85% of SpaceX. So whatever number of shares Elon has times the current trading price is how much Elon is worth just off of SpaceX, cuz it's crazy. It's crazy. But yeah, I think that all companies, when they first IPO, are overvalued. I think another one was like Instacart. Oh, what is I think it's, I don't know. But like just historically, we can look up any company that IPO'd and see if they held their value after they IPO. So they'll give us examples like Walmart and if you hadn't first invested in Microsoft, but Microsoft didn't start off as a $1.7 trillion company. That's my point. Microsoft wasn't valued at that when they first came out. They didn't try to get you to pay for what they thought Microsoft was going to be in the future. That's what they're trying to do with SpaceX, though. So back to trade desk. But thank you so much for the comment, cuz. Thank you so much. Great question. I'm scared of IPOs. I'm terrified of them personally. They just never, some of them never go back to what they IPO'd as. And think about the multiple. So like even the lift we was talking about. So if they IPO'd at $80 and came all the way down to $7, it never went back to 80. Those people still losing. And now going from $7 to 14 is 100% gain. Going from $7 to $21 is a 200% gain. So buying at the right price, you can benefit a lot sooner than buying at the wrong price and holding that position and then the stock having to recover. It'll have to double so many times to even get back to where you were. SpaceX ain't going nowhere. But as far as the price, it can be bought at the wrong price. But only time will tell. But I think that capital preservation is more important than profits. You have to protect yourself against risk before you focus on profits. That's the key. So these lows, they hadn't broke these lows. Trade desk, this shouldn't be lift. Do I still have lift up? That's blank. We supposed to be talking about the trade desk. Right, we got the wrong ticker up here. So trade desk, this is what we're keeping our eye on last week. They had a 52-week low right here on this candle. So what was that low? The low on that candle, the previous 52-week low, was floating data box. The previous 52-week low was $19.83. And with that bad news, it hadn't broke those lows yet, but they did break it this week. But here's what I found interesting. Even though they broke those lows this week, they've been real slick. Somebody came in and started buying trade desks up like crazy. And the negative narrative that they had changed. They changed. So part of the reason, the story behind why this stock was doing bad was that a company named Publicis, we're going to pull that up. I'm sure there was a report. Publicis, you see that? I got to take me off the screen. Give me a second. Publicis, right here in the news. Let me pull this over so you can see it. Blow this up. Come on. The trade desk shares are trading. Take this off the screen. Trading higher following a report suggesting that the company and Publicis have settled a dispute over ad tech fees. Okay, so let me explain to you what that is and what's going on. So big companies like Clorox, Procter & Gamble, they have to advertise. Trade Desk is an advertising company. Those big companies, most of these big companies that need advertising are represented by a company in Paris named Publicis. I don't know if I pronounced it right, but the company we just read. So because of that, the fear was if they lose those big customers, that's going to hurt the profits of this company. So supposedly, the article came out saying that they've cleared it. Everything's fine now. Right after that news happened, this candle doesn't look that impressive, right? But if we go into the minute candles, like I showed you before, we go in here. So this was Friday. Let me take the extended hours off and we can break this down. So we take the extended hours off by going to equities. Pull this over so you can see it. We take show extended hours. We don't need those right now. So this right here is Friday. Look at the volume down here at the bottom, guys. We don't have any volume labels up here. Oh, so let's zoom in. Take me off the screen. Here we go. The volume bar is down here at the bottom. I'm gonna mouse over them so you can see this. And we're gonna put the floating data box back up. So down at the bottom, that box at the bottom, you're gonna see that volume spike. See where it says 11,722,000? That's how many shares was trading in those minutes as I mouse over them. This bar right here, in that 1 minute, somebody bought 774,000 shares in 1 minute. They almost bought 1 million shares in 1 minute. Then the next minute, that was the full million because you got 277,000. Look, thousands and hundreds of thousands of shares was bought in a matter of a few minutes. Look, hundreds of thousands. Look at what the volume was prior to that. 11,000, 14,000. But hundreds of thousands started flooding in. Boom, boom, boom. And just looking at the daily candle, wouldn't even caught it. Wouldn't even seen it. Somebody bought millions of that share, of those shares on Friday. Millions of them. So that taught me that I need to look at the minutes. I can't just look at the daily candles. Because now if we look at the daily chart, that candle don't look that impressive. What happened is hidden inside that minute candle. I mean, in that day candle. But when we looked at the minutes, we could see that that was not normal to be seeing hundreds of thousands of shares bought in 1 minute. So again, this week, I'm going to be keeping an eye on that. And this is also a bullish engulfing pattern. That's a pattern that showed up. The body of this candle absorbs the previous candle's body. So that's a bullish engulfing pattern. So I'm keeping my eye on that trade. That's to see how that performs this week. As far as HPE, Hewlett Packard, I said I was going to keep an eye on that this week, but I didn't. But we're going to pull it up so we can see what happened. And the reason why I said I was going to keep an eye on it was because they had earnings last week. Yep, they had earnings last week, and they were the biggest gainer. They had gapped up, which they closed the gap. But now they're trading below the 9-day simple moving average. And they started that on Tuesday. And they closed below that area of support. And this was the gap that wasn't filled yet, that yellow. So let me zoom in. I'm going to remove this yellow because that's been filled now. So we don't need that there anymore. And it looks like it found some support on that level we put there at $47.97. But I'm still on the side of AI is overvalued. But because I'm learning more about how, and since this is HPE, we do not need that ticker up here. I don't even feel like putting that in here, but I'm going to do it so we can make sure that it's right. HPE. Come on. HPE, Hewlett. There we go. That didn't take long. Save and pull that up. So there's the right ticker for what we're looking at. They're inside the information technology sector. I still believe that the information technology sector is overvalued right now. It's extremely overvalued, but I believe that the banks and the institutions are going to milk it for as much as they can, especially with these rule changes that they've made with these IPOs. So you got SpaceX. They don't need that to fail. That's something that is in that favor. They don't need that to do bad because they got 2 other big IPOs they want to get people on too. Anthropic and OpenAI. Those are some other big ones that's coming. So SpaceX is kind of a tester to see how that's going to do before those other ones come out. I started at 9. We did a nice show tonight, and we had a nice amount of people tuning in. I'm about to get ready to wrap up the show, guys. So if you have any questions, you can drop them before I get ready to wrap the show up. And I want to give a special shout out to the 2 people that left comments. Sheena, I hope I'm pronouncing your name right. Thank you so much. You were extremely helpful because I was messing up. I need a producer, girl. and Cuzzo, Khadijah, thank you so much for your question as well. So if you guys got any questions, I'm about to get ready to wrap it up. Look like people running. They're like, all right, it's over. I'm gone. But we're going to be doing this every Sunday, guys. Every Sunday. All right. Don't look like we got no more questions. Ain't nobody asking. So we're about to get ready to wrap it up. So here we go. Some just came through. Let's see. You're welcome. Thank you so much. Appreciate you. All right. So I'm about to go ahead and wrap this up, guys. Let me put this like back up on here and then I can go ahead and wrap the show up. So here we go. You already know. I hope that you learned something, and I hope that you earned something. Thank you guys for joining me tonight. This Sunday, June 21st at 9 p.m. Eastern Time, I'm reviewing comments and responding to chats, as well as performing a live Q&A so we can focus on building our community and answering you guys' questions. The market will be closed this Friday, June 19th, in observance of Juneteenth National Independence Day. And make sure you keep tuning in weekdays following a market trading session at 11 p.m. Eastern Time. Take care and God bless.